Welcome back to another episode of Cup of Joe Crypto, where I bring you the latest news in Bitcoin and all related cryptocurrency news. Guys, I always want to start off by saying I am not a financial advisor. Nothing I say is financial advice. Always do your own research. Never invest more than you can afford to lose. Guys, please hit that subscribe button. It's always hard starting off new channels, getting subscribers and views. I'm not like everybody else who buys a lot of their subs and views. Why do it when it's a news channel? There's no reason to. So let your friends know and spread the word. Let's get right into the markets. BTC market cap up slightly to 267 billion, with BT dominance down slightly to 69.8%. Bitcoin having a nice little day, 1.2% gain, with bringing it up to 10,400. Ethereum has a nice little jump, up 5% today to $187. XRP up to 26 cents. Bitcoin Cash around $307, up slightly. Litecoin up 4%, up to $70. EOS with a nice 8% gain, bringing it up to right over $4. Binance Coin, Bitcoin SV, Monero, and Cardano all having good days. So today's a good day. A lot of green in the markets, which is always good to see. And what's even more different to see is that the altcoins are actually pumping a little bit harder than Bitcoin, and we all know that that has not been the case today. For a lot of you into the cryptocurrency market, a lot of people do trading. So I wanted to bring this article up as I feel it's so important. So many people don't report their cryptocurrency activities to the IRS. And as we all know, it will eventually come back to bite you. So David Kemmer writes that the IRS is blindly coming after cryptocurrency traders, and here is why. It states that the IRS is using unreliable tax forms received from cryptocurrency exchanges to come after traders. And here's the expert take. Over the past month, we have seen the IRS, the tax collecting agency of the United States, send out more than 10,000 warnings and action letters to suspected cryptocurrency holders and traders who may have misreported digital assets on their tax returns. Letters like the 6174A, 6173, and CP2000 have appeared in the mailboxes of cryptocurrency traders throughout the country. And the crypto tax software company that I run has seen an influx of frantic customers coming to us for tax help out of fear of penalties. The problem here is that the IRS does not have all the necessary information. In fact, not only does it not have all the information, but the information that it does have on the cryptocurrency holders that it is sending letters to is extremely misleading. This information, which was supplied to the IRS by cryptocurrency exchanges like Coinbase, is causing the agency to blindly and oftentimes inaccurately come after cryptocurrency traders. It goes on to state that he wants to break this down further. How is cryptocurrency taxed in the U.S.? In many countries around the world, the United States included, cryptocurrencies like Bitcoin are treated as property from a tax perspective rather than as a currency. Just like other forms of property, stocks, bonds, real estate, you incur capital gains and capital losses that need to be reported on your tax return whenever you sell or trade or otherwise dispose of your currency. How crypto is taxed in the US, a taxpayer's dilemma. Pretty straightforward. If you make a bunch of money investing in Bitcoin, you have a capital gain and a tax liability that needs to be reported. If you lose a bunch of money, you have a capital loss, which will actually save you money on your tax bill, though it still needs to be reported. It doesn't come as a huge surprise that many enthusiasts have not been paying taxes on their cryptocurrency activity. Because of this, it actually makes a lot of sense why the IRS has started carrying out these enforcement campaigns. However, the agency is using information that is extremely misleading, and it's leading to problems. This misleading information starts with Form 1099-K. It goes on to break down the 1099 Form K. Cryptocurrency exchanges like Coinbase, Gemini, and others issue 1099-K to users who meet certain thresholds of transaction volume on the platform. The IRS states on its websites that the 1099-K is an information return used to report third-party network transactions to improve voluntary tax compliance. In plain English, the 1099-K is used to report your gross transaction on a third-party network, in this case a cryptocurrency exchange. This means that all of your transaction buys, sells, transfers, etc. are summed up and reported on a 1099-K. If you meet certain thresholds, gross payments that exceed 20,000 and more than 200 such transactions, you and the IRS are both sent a copy of this 1099-K from the cryptocurrency exchange. The IRS is using these documents to monitor who is and who isn't paying the taxes correctly. These gross transaction reports can quickly get extremely large for high volume cryptocurrency traders. Remember, every transaction you made is being summed together on this form. I purchased $1,000 of Bitcoin and then traded that Bitcoin in and out for Ether 5 times, and my gross proceeds are now over $6,000. Even though I only ever put in $1,000 cash, this is because all buy 6,000, even though I only ever put in one, I'm sorry, this is because all buy transactions are added together to report gross proceeds. And in this case, I technically had 6 different buy transactions and 6 different sell transactions. A Bitcoin trade into ETH is considered both a buy of ETH and a sell of BTC. As you can see how this number can become extremely large for a high volume trader at CryptoTrader.tax. We've seen 1099Ks from customers in the millions of dollars range when the trader only ever had a few $1,000s worth of crypto. So why is this so problematic? 1099Ks are reporting gross transaction amounts and are being sent to the government. Yet the numbers reported are completely irrelevant when it comes to tax reporting, as you are only actually taxed on your capital gains and losses. Again, as an example, say you purchased $10,000 worth of Bitcoin in April and then sold it 2 months later for $9,500. You have a $500 capital loss that would be deducted from your taxable income. However, reported on the 1099-K, nothing is said of your net loss. The form only tells the government that you have $19,500 of growth cryptocurrency transaction. Ultimately, the 1099-K is not a form that should be used for tax reporting purposes, yet the IRS is relying on it for enforcement. Many people often mistake the 1099-K that they receive from cryptocurrency exchanges with a typical 1099-B that they might receive from their stockbroker or other investment platforms outside of crypto. The 1099-B is the correct form that reports all necessary information required to calculate and accurately report capital gains and losses, including cost basis and fair market value of your investments. It's very easy to determine your capital gains and capital loss with this form, contrary to the 1099-K. The fact that the IRS is relying on the 1099-K to issue action letters is problematic. Unfortunately, cryptocurrency exchanges do not have the ability to give you accurate 1099-B forms. So guys, it is extremely important to make sure you're doing your taxes, and not only doing your taxes but doing your taxes correctly. As you can see, crypto taxes can be extremely difficult, extremely easy to mess up. Get with a licensed an accountant who knows their ways in and outs. If you don't know what you're doing, it's best to be safe and report your Bitcoin. The next article I found pretty interesting. I think you guys will too. $800 Bitcoin buys $10,000 cash on dark web. Turnkey money laundering. And this is why, guys, the Bitcoin name sometimes gets thrown into as a criminal form of money. It's sad stories like this and the bad side of Bitcoin that typically the media likes to display as criminal cash. So, securities researchers have identified a new trend of lucrative and illicit conversions from Bitcoin to cash in their analysis of dozens of dark web marketplaces and forums. Financial scammers are selling cold hard cash for only 10 to 12 cents on the dollar to buyers willing to provide a prepaid fee in Bitcoin, according to the new Q3 2019 black market report from Armor's Threat Resistant Unit. Pretty crazy. There's a black market quarterly report. Never would have known. Goes on to say, dodging risks. The money laundering scheme seems cyber criminals offer up bundles of cash, typically from $2,500 to $10,000, in exchange for a 10 to 12% fee payable in Bitcoin. Once the buyer has transferred the cryptocurrency, they provide details of the bank, PayPal, or Western Union where the money would be sent. As an extremely simple turnkey service, this arrangement offers buyers sky-high returns on their illicit purchases and removes the need for a money mule or the risk of logging into compromised accounts. As the report outlines, money mules are agents who transfer ill-gotten funds between accounts in exchange for a fee of 10 to 20% of the value. Such actors typically open costly business bank accounts in order to avoid triggering fraud alerts or drawing unwanted attention when transacting large volumes. Notably, this conversion scheme benefits those selling the stolen funds because they avoid taking possession of the funds and instead merely transfer them, meaning the buyer takes the risk. It's a highly attractive offer. For Chris Hinckley, head of Armor Threat Resistant Unit, for those scammers who don't pass the technical skills and a robust money mule network to monetize online banking account or credit card credentials, this is an offer that can be very attractive. This clever service gives them an additional channel for monetizing the large amounts of financial data above available in the underground. And as previously reported, United States Treasury Secretary Steven Mnuchin recently claimed that the cash is not laundered to the same extent as Bitcoin, declaring that the government was intent on preventing the cryptocurrency from becoming the equivalent of the Swiss-numbered bank accounts. Reporters responded with some skepticism in Mnuchin's stance, quipping in the response that his argument was essentially and somewhat illogically that the existing system has never been used for illicit activities, but we're going to make sure crypto isn't used for illicit activities like the current system. Got it? So, pretty crazy on that story. Again, people are always going to try to way to launder money. And so, and Satoshi's true identity is... we don't know. Who is Satoshi Nakamoto? The identity of the enigmatic person / or people who created Bitcoin remains as mysterious as Jack the Ripper. Pundits and experts all over the world have put forth their assertion as to who Satoshi truly is, and it's a subject of much debate in the Bitcoin and cryptocurrency world. He's a legend in Bitcoin bulls' mind, and so Satoshi is regarded as a legendary figure, mysterious of such gigantic proportions that one may soon find him enshrined alongside Bigfoot and the Loch Ness Monster. That is why it will shock readers to know that I know the true identity of Satoshi. I will reveal his identity at the end of this article. Yet there is something even more compelling than knowing the true identity of Satoshi. It is the fact that nobody should care who or what Satoshi's true identity is, because it doesn't matter and never will. Satoshi is nobody, just like Bitcoin is nobody. There is an unsurprising correlation between the hype surrounding Bitcoin and the hype surrounding the identity of Satoshi. Both are composed entirely of vapor, just as there is nothing to support the value of Bitcoin above zero. The value of knowing Satoshi identity is also zero. So, it goes on to say that Bitcoin is one big scam. Bitcoin is based entirely on speculation. Its value is simply determined by what one person thinks he can sell it for and one person is willing to pay for it. There is no asset to back it. No matter how many Bitcoin bulls tell me that there's nothing to back other assets, either I will always tell them that they are not only wrong, but there is not an affirmative argument for Bitcoin. That is why I will also tell them that Bitcoin is simply one big scam being perpetrated by the very believers in it. It is the closest thing to the Dutch tulip craze of the 1600s that we have ever seen. So it shouldn't surprise anyone that believes in Bitcoin that it's potential that they should be equally invested in another ghost named Satoshi. The whole thing is so off the rails that even imposters are trying to gain notoriety for pretending to be him. So, As you know, I don't believe this article. I don't agree with this article, but his big cliffhanger. But I promise you I'd reveal the true identity of Satoshi. And now I will. Look in the mirror. He's right there. Womp, womp, womp. Guys, so many haters out there are always trying to criticize Bitcoin. At the end of the day, Bitcoin is a store of value. I can send it to you for football tickets. I can send it to you for a service that you did. But there will always be Bitcoin haters out there. And here is one of them. At the end of the day, I think all us Bitcoin hodlers will be smiling and laughing in the faces that have always thrown doubt at Satoshi and the Bitcoin. Haters are going to hate, and let them continue. Us as Bitcoin fans know the capability of what Bitcoin can do and the potential that it can do to change the lives of not only just the United States, not only just Europe, but the whole entire world. So let them continue to think that we're fools. In the end, we will be the ones laughing. Venezuela advances in crypto race as state bank welcomes Petro. Venezuela picked up pace in the crypto race when the State Bank of Venezuela showed support for the state-backed Petro. As per a report, the Bank of Venezuela, without any official notice, rolled out a new wallet registration module for the customers. This will offer the clients an alternative between crypto and fiat. The report also states that the wallet only harbors Petro for now. Nonetheless, the segment is still under development, and the choose the type of crypto option hints at future additions to the list. The state bank's undertaking falls under the state's extensive plan to realize the dream of a crypto nation. In fact, back in July, President Nicolas Maduro issued an express order for the Bank of Venezuela to open Petro desks at all the branches in the country. Additionally, in an attempt to popularize the idea, the president funded a massive Petro giveaway of 925 million bolivars, approximately 150,000 USD, to the youth of the country. Although the Petro has still not garnered enough attention, the Venezuelan government has firmly set its eyes upon crypto as the economic and political conditions spiraling out of control. As reported earlier, the Venezuelan economy has plummeted by half in the past 5 years, instigating a serious humanitarian crisis in the country. In such a situation, cryptocurrency, if used in an innovative way, can help address Venezuela's current decimated economy and can, in fact, change lives for the better. Guys, this this episode has brought you so many different aspects. It's bringing you beware of making sure that you are doing your taxes in the correct way. It shows you the bad side of Bitcoin, how you can use it to money launder. But right here, it's also showing you how cryptocurrencies in general can be used to help potentially save foreign countries' banking systems and what has failed them for the past 5, 10, 15, 20 years. And then in my one article, it just shows you that there's always going to be haters out there. There's always going to be people trying to slander the name of Bitcoin. But of the people who have educated themselves as myself, we know the potential that it can bring, the lives that it can change, and the good that it can do for this world. Guys, I always am so excited to bring you different stories. I look forward to bringing you more on the next episode. Keep spreading the word. Keep sharing my name. Hit that like, hit that subscribe button. And until next time, guys, see ya.